The World Bank has upgraded India's GDP forecast to 6.9% in financial year 2023. It said in a report that the Indian economy is expected to grow 6.9% in the current fiscal year. Earlier, Indian economy's growth in this fiscal was pegged at 6.5%. So there is a significant upping of that particular figure to 6.9. The World Bank said that the upgrade is due to robust economic activities in India. The report sees an average retail inflation at 7.1 this year. India's GDP forecast for the financial year 2023, however, is lower than 8.7% for the financial year 2021-22, as it says that India is affected by spillovers from US and Euro area as well as from China. The bank projects India to be one of the fastest growing major economies. It said that the slowdown in emerging economies could also position India as an alternative investment destination.
The World Bank projects that India's economy will grow at 6.9% this year, in 2022. So we were projecting that the economy will grow at 6.5% until recently. But having said that, a good reminder that earlier on in the year we had projected a much stronger growth for the Indian economy, at above 7%. Then, given the global development, we downgraded the growth forecast to 6.5%. Now, with the recent quarterly growth numbers coming in for the Indian economy, we noted that in the second quarter, the economy did quite well.
My colleague Tamanna Inamdar explains to us why this report is significant and what are its implications. Let's listen in.
At a time when global agencies are lowering their forecast of growth for the world, for major countries and for India, there has been a different take from no less than the World Bank. In their latest India update called Navigating the Storm, the World Bank has raised its forecast for at what pace the Indian economy will grow this financial year from 6.5% earlier to 6.9%. Now, this is a big deal because, like I said, while everyone is lowering forecasts, India is expected to grow at a better pace than was seen a few months ago. The reason for this is because in this September-October quarter, the Indian consumer has spent a lot more. This is coinciding, of course, with the festival season. Domestic demand in India is the real key driver of the Indian economy, and which is why the World Bank in its report also says that India will suffer everything that the world is suffering in terms of high commodity prices and recessionary pressures, but will be much better off. I just have to add over here, though, that for the next financial year, the World Bank has actually lowered its forecast slightly for India as well. But they have gone from 7% to 6.6% for the next financial year. Overall, what this means is that while there will be some tough times ahead in this financial year, we'll still be better off than the rest of the world. Now, let me just go into a bit more of detail of what other agencies have said. So while the World Bank for FY23, that's financial year 23, sees India's growth at 6.9%, up from their 6.5% forecast earlier, Moody's for this calendar year, so they do it from Jan to December, has seen India's growth forecast drop from 7.7% earlier to 7%. The reasons were higher inflation, higher interest rates, and slowing global growth. On the other hand, the IMF has seen India's forecast, which they said would be at 7.4%, drop to 6.8%. So they've also lowered their estimate of India's growth. The reason they gave is that the April to June quarter saw external demand slowing down. That means there was less demand for our exports. The RBI on its part has a 7% growth target, which they themselves have lowered from an original 7.2%, while S&P says that India will grow at 7%, down from 7.3% earlier. So the ballpark figure of India's growth for this financial year, 6.9%, 7%, is going to be lesser than what we clocked this year, the previous year, but better than most of the rest of the world. In short, if I had to really simplify this, the world is going to go through a tough time this year and the next. India will also suffer some of those problems, but will be relatively better off.
Right. So after that interesting explainer, I am now joined by Dr. Santosh Mehrotra, senior economist, who is with us to help us understand a bit more about this particular report. Good evening, Mr. Mehrotra. Of course, without wasting any time, there has been a statement, a sentiment rather, that all of this a revising of the growth rate per se is because of the developmental agenda of Mr. Modi. What would you attribute this revised figure to that the World Bank has now announced?
I don't think any international agency takes on board any development agenda. And I've read through the entire report, and it doesn't say anything about the development agenda. So I don't think it has anything to do with that.
No, I'm saying the political class has already come up with that claim. I was just trying to put it in perspective with the reactions that has come into this.
There's nothing preventing the ruling party from coming up with any claim. I mean, the fact of the matter is that no international agency takes that kind of thing into account. All that this report is saying is that, you know, we might be doing a little better than other emerging market economies, given the rather worsening international environment. We also have to then remind ourselves that we did much worse than the vast majority of emerging market economies in FY21. We contracted by 6.6%. The global economy contracted by 3.1%. So from that low base, we rebounded to a growth rate of 8.7% in the FY22. And this growth rate, which is projected for FY23, and then, as you rightly pointed out, for FY24, is lower in each year compared to what we have experienced in FY22. So we grew faster than any other economy last year because our contraction was among the worst. So I don't know what there is to pat our back about, firstly. Secondly, let's just remind ourselves that among the G20 countries of which we hold the presidency here, we are the only low middle income country. The vast majority of other countries are upper middle income countries or they are high income countries. We have a per capita income of $2,200 per annum at market exchange rates, while the majority of upper middle income countries have a per capita income which is nearly 3 times that. So we have to grow fast. We have to grow faster than other economies. That means if we are the fastest growing large economy in the world, it's nothing to do with particular policies. India has been the second fastest growing large economy in the world for the last 15 years. And in recent years, because China has slowed for its own reasons, we have become the fastest. So, you know, the point is we have to grow fast if we have to reduce poverty. And let's just remind ourselves that this same World Bank, in an official report, told us just 2 months ago that in 2020, the world economy had added 70 million people to the poverty, to below the poverty line. In other words, those below $2.15 per person per day. And of that, 80% came from India. And that's an official report of the World Bank, okay? So we have to keep all these things in mind, which suggests that if poverty had increased, especially in the year when our economy contracted by 6.6%, it clearly suggests that demand is depressed. Now, I mean, you look at the bank's own projections for the components of the GDP. Let's look a little bit carefully. Private consumption in FY21 had contracted by 6%, it grew by 7.9%. But you know what that means? It means that per capita consumption, final consumption of India's population, I'm saying average, was below the 1920 level. And that's the average. So if you take into account the fact that at the for the bottom 50% of the population, their consumption would have contracted, then
Mr.
where is this?
Mehrotra, you are firstly making a point that we are growing at this rate also because our contraction was among the worst and therefore it looks good at this point. But would you concede, sir, that given the fact that the other global economies have been in a mess, would you say that we have been able to hold our ground? India is able to hold its ground?
Well, I mean, this is a very subjective statement that the other world economies have been in a mess. Have they? Really? I mean, China grew in the year that we contracted. Vietnam grew in the year that we contracted. So, I mean, let's look at the facts. Don't say they've been in a mess. Yes.
Economies are not seeing the kind of growth that we are seeing. Let me rephrase myself, sir. Please go ahead.
Yeah. So there's no issue with the fact that we are going to be the fastest growing large economy in the world. But I repeat that we are also the poorest among them. We have a low base in the first place. Any economy which has a low base needs to grow fast and can grow fast. If your per capita income is at $5,000 as opposed to $2,200, you cannot grow at more than 5% or 6%. Let's just remind. Yeah, so that's the point you need to, your viewers need to understand.
Santosh Mehrotra, as always, a pleasure having you on the show to give us a clear understanding of the figures that we often quote, but we don't really get the full implication. Thanks to you for giving us an understanding of this particular report that World Bank has released. Moving on, it's a